whether you succeed or fail, many businesses will obviously be looking for that successful outcome and wanting to sort of talk about that when they submit their claim. But that is really of no interest to the assessors.
Yeah.
And what they are looking at is, how did you do your R&D? Did you do it in that structured and systematic manner? Do you have information that shows how you came up with your theory, how you tested it initially, how you maybe scaled that and continued to validate and test that theory at scale? So that process of how you did your R&D is vital and really the important component.
What if I told you that some of Australia's most innovative startups are leaving hundreds of thousands of dollars on the table every year? Not because they aren't innovating enough, but because they don't understand one of the most powerful funding mechanisms available to them. Today, we're talking about the R&D Tax Incentive. But here's the twist. It's not actually a grant. And many founders who think they're not eligible are often the ones who should be claiming. To unpack the myths, the mistakes, and the opportunities, I'm joined from Shaun Van Dijk from Intellect Labs, who's spent more than 15 years helping startups, scale-ups, and innovative businesses access millions of dollars through Australia's innovation funding ecosystem. If you're building technology, developing new products, solving technical challenges, or investing heavily in innovation, this episode could save you a lot of money and potentially extend your runway. Before we jump in, if you're a founder, innovator, or startup leader looking to achieve product market fit faster and scale smarter, hit the subscribe and join our growing community. Shaun, welcome to the podcast.
Hi, Trevor. Great to be here. Thanks for having me.
Oh, it's good to have you here because this is a really important topic for a lot of startups to get to know. But I guess for those that haven't come across Intellect Labs before, can you tell us a little bit about your journey and what you actually do?
Sure. So I'm co-founder of Intellect Labs, and we were established about 6 years ago. We're specialists in government funding. So we provide support to businesses of all shapes and sizes across a range of industries to navigate, apply for, secure, and then manage the funding that they get from government through grants and through the R&D Tax Incentive, which is the one we're going to talk about today.
Excellent. I think that's a topic that many should be interested in, Shaun. You work with innovative businesses every day. What's the biggest misconception founders have about the R&D tax incentive?
I think that it actually exists. I think many are just completely unaware that there's this program out there that's available each and every year. So it's there annually that they can tap into. It's not competitive like a grant, that as long as they meet the criteria and can demonstrate what they've done in terms of R&D and what they've spent, that they can actually get some cash back from the government for that work that they've done, for the new things they're developing, for the technology that they've created. So it's exciting, and many just are unaware that it actually exists.
Good. And so why do so many startups immediately think that that's not for us?
I think it's about perspective of R&D. I think many businesses, probably assume that it's quite formal, that it's scientific, that maybe life sciences or, developing new drugs, that kind of space is where the R&D primarily exists. But I mean, for the purposes of this program, R&D can really occur across any industry and any sector, and the criteria are the same. So the same criteria applies in terms of what qualifies. It's just that how that relates and aligns with the work that a company is doing needs to be figured out, and that's where we help. But I think it purely is down to the perspective of R&D, and many just thinking that the problem solving or the development work that they're doing just isn't the type of R&D that's going to get support.
Yeah. Okay. So now I picked up on that, in that you often say it's like a tax incentive, not a grant.
Yep. Yes.
So what is that distinction? Why is that so important?
Yeah, it's very important because it's fundamentally different to a grant. And I think many businesses are probably more aware of how a grant works and operates, where the government will have a program that they can apply for. And if they're in the top, 10 projects that have been submitted, they might secure that funding. The R&D tax incentive is completely different. So it's there. It's run through the tax return. So firstly, it is part of the company tax return that a business submits each year, and it's non-competitive. It's they self-assess. They figure out whether they've done eligible R&D. They've got the records to prove what they've done,
Yep.
and then they can submit that to the ATO and receive money back through their tax return, either a reduction in tax, or if they're not paying tax and they're not making money, if they're in losses, potentially get that back as a refund, as a cash refund to reinvest
And
in next
and
year's R&D.
and I imagine that's really important
Yeah.
certainly from my perspective of a
Mm.
lot of pre-revenue
Yes.
startups that are, struggling to keep the cash up, and it's a
Mm.
really good way to fund next stages.
Yep. Yep. It really is. So, I mean, grants can provide bigger cash hits, but the consistency and the predictability of the R&D tax incentive is really that's its advantage. The
Yeah,
fact that it's there, that you can plan for it, that you don't have to compete, you don't have to, you know, get alerts about a new program opening, that you might or might not qualify for. It applies for any industry. It's not restricted to a geographic location or a particular industry like many grants are. So there's less frustration, we find, and companies, if they're doing legitimate R&D, can continue to pursue it and access that R&D funding year after year, which is
excellent. Yeah,
vital
yeah.
for startups and early stage businesses.
Awesome.
Mm.
Something that everyone should be considering if they're in the innovation space.
Yeah.
So if I'm an early stage founder and I'm
Mm.
burning through
Yep.
cash and trying to build a product,
Yep.
why should I care about the R&D tax incentive?
Yep.
Or is that, do you think we've sort of covered that?
We've covered it a bit. I think the regularity of it, and I think the companies that do the best with it are the ones that plan for it each year. So,
Yeah.
a company that can plan for pursuing it, submitting their application and getting that money back and potentially bringing their tax return forward so that cash flow, the cash boost that they can get from the program becomes really, really important. So when cash is short and you need that money to continue pursuing the R&D activity or the technology development that you're doing, to be strategic about it, to plan for it, to bring forward your tax return with your accounting or tax advisor so that it provides that cash boost. Those are the businesses that really get the most from
Do
the
well at it.
program. Yeah, that
Yeah.
do the best from it.
Yeah.
Mm.
So
Yeah.
have you come across, the kind of companies that are
Yeah.
surprised when they discover they're
Yep.
actually eligible?
Yeah, so like I said, I think some know that it's out there, and probably based on them being in a sector where it's heavily advertised, and there's others that have pursued it. They've got advisors that can keep them informed about this program existing. I think the ones that are often surprised are those in sectors or industries where they may not have expected that this would support the work that they're doing. So I work a lot in the agribusiness and the manufacturing space.
Yeah.
And those two in particular, I think because their problem solving can be fairly informal, it can be less structured, which could be a problem for accessing the program. So we can help with that. But fundamentally, if they are solving problems, if they are doing something new or different, if they're creating a new solution, something that hasn't been done before, hasn't been tested before, when we start talking with them and saying, well, actually, the type of work that you're doing is very closely aligned to what's required for the R&D
Yeah.
tax incentive, I think they get a big surprise, and I think they're often pleasantly surprised.
I bet you they're pretty happy when they hear that from
Absolutely.
you too.
Yeah, that's
So
right.
do you think that software startups are missing
Mm.
out?
Yes and no. I would say, like if you're developing a new piece of software, you should absolutely be considering whether you qualify and whether you can access the program. There is some caution though that you got to take, because it is an area where there's been an explosion in claims. So
Yeah.
over the last 10 or 15 years, software development has obviously really taken off. I mean, we saw an era of app development, several years ago, which everyone developing an app for their business decided, well, this R&D tax incentive might be something that I can pursue to support it. Now, many of those activities didn't qualify because they just didn't meet the threshold of new knowledge and overcoming a technical uncertainty that enabled them to be claimed.
Yep.
So I think, yes, I think many probably are missing out and not aware that software development work can qualify, but there needs to be some caution as well because of the growth and the explosion of software development claims. The
Yes.
regulators, so the Department of Industry and the ATO, which are the two bodies that oversee the program, are very savvy to that. And they have published guidance, which is quite helpful for the software space. And there's new AI R&D advice and guidance coming out shortly. But yeah, as long as companies are reviewing that guidance and understanding how their activity aligns with what is required to claim, they should absolutely be looking at the R&D tax incentive.
I guess the message for any software developers out there who might be listening is, give Shaun a call and run through the process and just see if you do qualify. Because
Yeah.
if you can, then this is money that you deserve because you're risking it
Yeah.
in your own development. So, Shaun, how early should founders be thinking about this? Before development starts or after they've built something?
So in my view, really developers should be looking at the R&D tax incentive and planning for it from day one.
Yeah.
As soon as they're starting the development process, even understanding if there is a technology or solution that they can develop, one that doesn't exist currently. So understanding what the benchmark solutions are, what the existing knowledge is vitally important. And I think if companies that are going to undertake software development or any sort of technology development work are clear on that and then understand what is the new knowledge they need to develop and where the R&D has to happen. If that can be done early with a mind to what needs to be put in place, particularly around documentation to satisfy the requirements of the R&D tax incentive, they do far better than companies that try midway through a project or towards the end of the project to then put in place the information that needs to be captured and the systems that are needed to support their claim. And it is, we'll probably talk about this a little later on as well around the importance of documentation. But I think that's where companies can come undone, where they've done legitimate R&D, but it just wasn't tracked very well from the beginning. So if it's set up well at the start, if things are being tracked and, organized in a structured manner, it really supports, a high quality and really robust R&D tax claim.
Yeah, so the message there is really simple. Get onto it early,
Yes.
understand the process and what you need to be recording and how to maximize it, because it's something that's there for you
Yep.
as an incentive to be innovating in Australia. So,
Mm.
Shaun, I guess one of the most interesting things that I've heard you say is that R&D isn't about success. It's actually about the process. Can you
Yes.
can you just explain that a bit deeper?
Sure. So, and it's really around the criteria of what qualifies as an eligible R&D activity. So the way the program's structured, every project and every claim has to have a core R&D activity. That's the heart of the R&D. That's the experimentation and the development of the new knowledge, the testing, the analysis that occurs. Part of the requirements of a core activity is that the work has to be done in a systematic manner. So it has to be done systematically and in a structured process from the beginning of your theory through to the figuring out whether you were successful or not. What isn't part of the criteria is that component at the end of whether there was a successful outcome. Really, all the assessment is done about how the R&D was performed. So in that case, whether you succeed or fail, many businesses will obviously be looking for that successful outcome and wanting to sort of talk about that when they submit their claim. But that is really of no interest to the assessors. And what they are looking at is how did you do your R&D? Did you do it in that structured and systematic manner? Do you have information that shows how you came up with your theory, how you tested it initially, how you maybe scaled that and continued to validate and test that theory at scale. So that process of how you did your R&D is vital and really the important component. Success, unfortunately, they just don't care about that. It's not part of the assessment criteria.
Which is a logical way to incentivize people to take risks.
That's right.
And therefore, by engaging in the R&D tax incentive, it's actually a way to mitigate your risk. Yeah. So, like it. Okay. So, what exactly is this technical uncertainty and why is that such an important, concept?
Yep. So going back to those criteria for a core activity, really the most important one in my view is to demonstrate that you couldn't predict the outcome at the beginning of your R&D. And that is, one of the criteria of a core activity, but in my view has really been elevated as the most important and fundamental question when
Yeah.
we talk with clients and when we're going through the process of preparing their claim or defending a claim with the regulator. What they're interested in understanding is, what is the existing state of knowledge? So how is there, through your review and analysis of what is out there and what exists and how that might support the work that you're doing, where are the gaps? Where is the unknowns? And we talk about that as technical unknowns or technical uncertainties. So being able to identify that at the beginning, saying, this is what we're proposing to do, this is what the existing knowledge in, and here are the gaps. Obviously, the R&D then is all about filling those gaps and developing the knowledge to then resolve the uncertainty that was there at the beginning. So that is really the fundamental question for any R&D project. And that's where most projects sort of, get over the line or miss out in not qualifying,
Yeah.
because there either was existing knowledge or there were some clear gaps that needed to be filled.
Yeah. So if I was building a CRM system, for
Yep.
example,
Yep.
it's not as if the knowledge doesn't already exist about how to do something, unless I'm doing something in a very novel
That's right.
way that I don't know how
Yeah.
the outcome of this will work.
And it really involves pulling apart the proposed solution and really looking at the nuts and bolts. So what are the components that are needed? What development work needs to happen? And there might be some components that are straightforward, but the elements that we look for are really those ones that there is, no way to predict whether those outcomes can be achieved. And we really do talk about competing objectives. So trying to do more than one thing, it might be possible to achieve one outcome, but to achieve that outcome plus this other set of outcomes can often be quite difficult. And where those are unique and challenging, that's what we really try and help clients identify, like
Yeah.
how that then supports their claim in their
Their
project.
claim.
Mm.
So have you got some examples that
Mm.
founders might recognize?
Yeah, I mean, we come across all sorts of different projects. I would say, I mean, the ones that I think are always interesting, and it probably harks back to my focus in that sort of manufacturing and agribusiness space, often find that companies are very good at identifying that formal R&D, but not so much the informal R&D. So in a manufacturing case, in many manufacturers that I deal with of different shapes and sizes, they may well know that, developing a new product that's not out there, that's obvious sort of R&D. They can point to what's different about it, what are the things that they're going to trial and test, what their theories are.
Yeah.
I have had experience with many that, though, would stop the R&D sort of at the end of that initial sort of testing and validation process in the lab. So, it might be that they've spent, they've got a development team and they'll spend, a month or two developing this product. When that enters a manufacturing process, when that's actually scaled, there is ongoing uncertainty and ongoing unknowns in that
Yeah.
component of the R&D, and often that's the bit that they miss.
Yeah.
And I think that equally applies to other settings. I think in all forms of R&D, understanding where the beginning and the end of your R&D is really a very important piece, and it's trying to ensure that you can confidently predict that outcome once you've completed your R&D. So yeah, we really work with, again, using the manufacturing example, I think trying to broaden the understanding of where the endpoint is for that R&D and
Yeah.
where that theory is kind of validated and confirmed, because it may well work, manufacturing one of these products, but when you have to manufacture 1,000 of them in a day, that involves a whole range of uncertainties and challenges that need to be resolved.
Yeah. Well put, Sean.
Mm.
For our viewers,
Mm.
just make sure that you stick around, because coming up, Sean reveals the single biggest reason innovative businesses lose out on legitimate R&D claims. And it's not because they weren't doing the work. So if you're building products, developing software, or solving technical problems, the next few minutes could save you a lot of pain and a very expensive lesson. And I will mention here, Sean has provided a full overview as a download with the link being in our description. So make sure you grab that. So, Sean, let's talk about the
Sure.
documentation, because this
Mm-hmm.
seems to be where a lot of founders get caught out.
Mm.
What's the biggest mistake businesses make when documenting their innovation activities?
Well, I would say not documenting them at all is
Yeah.
probably the biggest issue that I've seen.
Yeah.
Um, Yeah, it is just not documenting end to end the project. So all aspects from the very beginning through to the end of the R&D activity and the outcomes that were achieved. Really, the biggest problem I see is the beginning. Many companies and many operators are very good at tracking what they're doing when it happens. They've got various forms of information, logs and emails and meeting records and diary notes and all sorts of information of what they're doing. What
Yeah,
they often miss is that beginning bit of what they're proposing to do. Doing that due diligence of what is actually out there, what is the existing state of knowledge,
yeah,
and really identifying at the start that their intention is to do R&D, not looking back at it, at the end of the process and go, oh, actually, we did some R&D there.
yeah.
Really being proactive and identifying that at the beginning is the biggest gap I've seen.
It's such an
Mm.
important thing. Is it sort of like creating the hypothesis and all the assumptions, and now we're testing those to see if they
Yeah.
actually are real?
Yeah, we talk about, grade 10 sort of science experiments, right? Where you've got a theory, a hypothesis, and a
Yeah,
method, and you've got results that you've identified that you're going to track, and you actually capture those and do some conclusions at the end. That is essentially what the government expects. Like, that is how they expect the R&D to be done.
yeah,
Now, that doesn't mean you need to track things as formally as that of having, scientific reports. But it does mean that you need to demonstrate how those aspects are part of your project. So there
yeah,
does need to be information about, well, you had a theory. So what shows that you've got that theory? Was there some correspondence? Was there some, information drawn up, design drawings, for instance, at the beginning, whiteboarding, things
yep,
like this at the beginning of the process that show that you were serious. You had a theory and you were proposing to pursue it. Yeah, that all needs to be in place. And usually there are gaps, and they tend to be at the beginning rather
yeah.
than through the actual process itself.
Which is a good
Mm,
reason as to why to talk to you and to really understand how to prepare well. So
mm,
that's a good tip. And
yeah,
I guess, you've spoken a little bit about the evidence, but,
mm,
what's the real evidence that needs to be captured as they
yep.
go along?
Uh, Honestly, it can come in any shape or size or form. Any sort of documentation is helpful, and we find that it can look very different from one to another. Now, we would recommend using a template of some sort, using a project report or a project proposal summary. But
Mhm.
in the absence of that, you can be fairly pragmatic. You can use emails, you can use your diary that you capture notes in, you can use your Outlook calendar to show when certain activities have taken place. If you're dealing with third parties, that can be great evidence because they can provide reports and data and invoices summarizing what they've done and how they've supported the R&D. But really, it's a package. There's not really a silver bullet, I would say, for the
Yeah,
documentation because you are trying to demonstrate that the activities qualify, but that there's also costs attached that you're going to ultimately claim through your tax return, and that does require a fairly broad scope of evidence and information.
yeah. And
Mm,
I guess, Sean, we've
mm,
spoken about the importance of preparing and
mm,
creating the unknown and all that sort of thing. But what are some of the more
mm.
common mistakes you see startups and SMEs sort of making?
So one would be, yeah, failing to document information across the process and sort of coming to, the table quite late in the piece. So thinking about R&D tax probably after a lot of it has happened
Yep.
rather than at the beginning. So that really does hamstring your ability to pull all the information that's required together. So definitely planning. I think planning is often missed and
Yes.
it's done as like a,
An
last minute
afterthought.
end of process kind of job because an accountant said I should look at the R&D tax incentive for my tax return. So being forward looking, I think, is kind of the tip there. Um, and
Uh,
then
Sorry, Sean.
yep,
Can I just interrupt?
sure.
If there are any accountants out there that
Mm,
happen to be watching this and
mm,
you're looking for good partnerships in order
mm.
to advise your clients, definitely reach out to Sean. Sorry, Sean. I just wanted to pop that in
No, that's fine.
because the accountants
Mm,
are accountants and
yeah,
not necessarily across the expertise required for the R&D tax
yeah,
incentive.
and thank you for pointing that out. I would also say that we're specialists, as I pointed out at the beginning, in government funding, and in the R&D Tax Incentive, which is, at least half of what we do. It's a big focus because it is such a big program,
Mm.
and it is complex. And I think that is something as well. And it probably goes to the point that we're talking about here for what companies need to understand. It's getting, I would say the law has not changed, but the amount of information that has to be provided is increasing year after year. And there are traps, basically. There are things that can trip you up. And we've talked about documentation, but
Mm.
there's other, issues as well and pitfalls, which we can talk about shortly. And just to be aware of those. And I think, either a company self-preparing or an accountant that has done some R&D tax claims and is sort of dabbling in that space, but it's not their specialty. We're happy to provide advice. We often provide a second pair of eyes on claims, just so that those issues are not missed. You're not including a statement or something in there that you shouldn't, that really is a red flag to the claim, or claiming an activity that really shouldn't be there, or even missing out on some costs that you could otherwise pick up that you weren't aware of. So
Yeah.
yeah.
Good. Well, hopefully some of them will reach out to you. So let's unpack some of this sort of one by one. I'm just going to ask a few quick rapid fire questions.
Sure.
So, why can copying last year's claim create problems?
It's your R&D claim is assessed each year, so each 12 months has to stand on its own 2 feet.
Mm-hmm.
Last year's information is essentially irrelevant to this year's claim. It provides good background, so you can include a little summary of what you did and where you got to. But this year, you have to prove every year that you're still doing eligible core and supporting R&D activity. And so that requires a refresh every year to restate and identify what are the uncertainties that are still there in this year. Why didn't you overcome them last year?
Yeah, good. What should founders know about paying themselves and related party expenses?
So for expenditure to qualify, you just need to incur those costs on the R&D activities, but for related parties and for owners, they're deemed to be associates of the business that's making the claim, and there's an extra rule that attaches to their costs, to those payments. And that is that it's not enough to just incur those costs, so basically have the invoice, but you also need to physically pay those by the end of financial year. And that is just to avoid, scenarios where those amounts are not being paid and they're getting included in a claim. It's really important that they are actually physically transacted.
Yeah, that's a really important one, because I think a lot of people think their time can be claimed, but if they haven't paid themselves, then it's not going to be eligible.
That's right.
Yeah. So what are some of the traps around offshore development teams?
So overseas R&D activities can't be claimed in your standard R&D tax claim. It's only there to support Australian-based activity and the costs associated with those activities.
Yep.
There is a way to claim overseas activity, but it's very difficult to navigate. It's called an overseas finding. So in your standard claim, if you haven't secured that overseas finding, any activity that is done overseas, the costs that attach to those activities can't be included. So that's something to be careful with, because even if you engage an Australian, developer, and they then, subcontract to an overseas, developer or an overseas development team, the ATO will look through that and look where the activity is ultimately performed. So you do need to be careful. And it's part of the cost benefit of your R&D is that to preserve your ability to claim your Australian work, you really got to make sure you're doing that activity here.
So that's a red flag to, if you are contracting with an Australian developer, to ask the question, where are these activities taking place?
Yeah.
Yeah, good.
Absolutely.
That's a very strong tip. Another one, Shaun.
Yep.
Why do ownership and control matter when claiming R&D?
So it's important in an R&D claim that the right entity is making the claim. So the entity that is going to benefit from the R&D is the test. It's the entity that's undertaking the activities themselves, or that's directing others to undertake those activities on their behalf. So that also extends to ownership of IP and which party is bearing the financial risk. So, which party is putting their money on the line. It's really important because you can have issues where in a more complex, sort of group structure, there can be debate as to whose R&D it is to claim.
Yes.
And also when you're dealing with third parties and contracting out the R&D work, you need to ensure that those contracts and those agreements demonstrate that it's your benefit, basically, that's your right to claim the R&D based on the tests that I just mentioned.
Yeah. And so why do technical experts sometimes make really poor R&D applications?
Technical experts as in self-preparers. So
Yeah.
I would say it's the problem that they would have is really simplifying and explaining the work that they've done. So
Thank you.
jargon is a problem in an R&D application. You have to remember that the people assessing your claim are not industry experts. They are government officials, and they are across what the R&D tax incentive requires, but they're not necessarily experts in your field. So you need to translate what you've done, which can be very technical, into a summary that demonstrates to that reviewer how that aligns with the criteria that they have in front of them.
Keep it simple,
Mm.
stupid.
That's right. Yes, to an extent, without
To an extent. Yeah,
oversimplifying
yeah.
and running the risk that it then looks like it was a simple exercise. But yes, avoid the jargon.
Yeah.
That is difficult to understand. Reflect everything back in terms that will be a bit easier for a layperson to understand and digest.
Now, if you could give
Mm.
founders one piece of advice before they start their next innovation project,
Mm-hmm.
what would it be?
Document what is in your head right now, like write it down. I think the issue there is that founders carry so much in their brains. There's a lot there. They know the existing knowledge. They know what they're trying to do and what their objectives and outcomes are that they're seeking to achieve. They know what success or failure looks like. But if it's not written down, it's like it didn't happen. So
And
that's really important.
I might throw in here, Shaun, today
Mm.
with all these AI transcribers
Yep.
and things like that,
Yep.
it's so easy to even just do it by voice,
Yes.
rulers, and get it documented in.
So
So,
I would say, and that is absolutely a great tip. I think practically about how you can actually start getting more information captured. So I think, note takers, AI note takers in every meeting or discussion that you have, even off your phone, use the app there, and voice record, do voice memos to yourself as well,
yes.
at different points through the project. Photos and videos, I actually say this a lot, and I mentioned the whiteboard.
Yeah.
Take photos of a whiteboard where you've scribbled down, your ideas with your team,
Yep.
or you've, sketched something out. Photos are fantastic. You could defend, pretty much an entire claim with photos and emails,
Yes.
as long as that's capturing the right type of information. So think practically about the information that you have at your fingertips and how you can use it.
Yeah. Great.
Mm.
Really good tip. So what's one myth about innovation funding you'd love founders to stop believing?
That a good idea is enough to get funding. And I think that applies to the R&D tax incentive, but also grants, which is an area that we also work with companies that we advise. Just having a good idea is not enough. Government, we view as an investor in what you're doing, whether that is in the R&D tax incentive or through grants. You need to show how you're doing the R&D in the case of the R&D tax incentive, or for grants, show that you are going to benefit, the economy, or you have a path to market, that you understand and are across, how you're going to actually commercialize your innovation and your IP. So I think, that would be my answer to that.
Yeah, it's a good one.
Mm.
And so as we're getting towards the close, what's one thing every founder should do this week if
Mm-hmm.
they think they're going to be undertaking R&D?
Start capturing that info, which we've kind of mentioned.
Yep.
Look at what's available online. So there are resources online that you can start to get a sense of what's required, through the R&D tax incentive. So look at the brochure that I've provided as well, or online. I mean, there is good material that the government puts out, guidance materials for industries and sectors about what qualifies and what doesn't. And otherwise, just reach out. I'm always happy to answer questions, and we talk with a lot of startups and founders, and we're happy just to have an initial discussion, just to give some tips and ideas of what to do. But I would, start writing things down, start getting informed, and get some information, and then reach out for help where you need it.
Very good. And I guess where can people connect with you and learn about Intellect Labs?
So LinkedIn, I mean, yeah, have a look at our LinkedIn page, connect with me there. We publish articles every week about government funding. So whether that's alerts to new programs or developments in the R&D tax incentive or just things that you need to be aware of if you're looking to secure government funding. Also our website. So we have a website where those articles are also kept and we've got our contact details there. So yeah, either
Excellent.
LinkedIn or the website.
And we'll put a link to the Intellect Lab LinkedIn. One of my biggest takeaways from today's conversation is that innovation funding isn't reserved for large corporations or deep tech businesses. The reality is that many startups are already undertaking eligible R&D activities without realizing it. The challenge isn't whether you're innovating. The challenge is understanding the process, documenting it properly, and knowing how to access the support that's available. Shaun, thank you so much for joining us and sharing your expertise with all the viewers.
Thanks for having me, Trevor. It's been great.
Yeah, no, it's very informative. And this is something that I think if you're a viewer and you're even looking at it for yourself, but if you know other people that are actually innovating, please share this episode with them and ensure that they're going to be able to get back, the risk that they're taking with their investment and getting that help from government. And to everyone watching, if today's episode helped you think differently about funding innovation, building products, and making sure that you subscribe here to that Product Market Fit Guide podcast, share this episode with other founders and check out our other conversations designed to help you achieve product market fit faster and scale with confidence. Until next time, keep testing, keep learning, keep building those products that people actually want. Thanks again, Shaun. Been great having you on board. To all the viewers, ciao for now.